So guys, what a month we have just had in the market. We had that 6% drop where everyone was worried if the stock market would crash, the people who don't understand investing panicked and sold, and the long-term buyers watched eagerly for more buying opportunities. Since the market crash, we have gone back up 3%. And that's why I recommend being a long-term buyer. Because anything can happen over the short term, but over the long term, businesses will make money, and if you're a business owner, a stock owner, you will make money. Anyway, the market correction that we've just had does remind us that we are in a pricey market. So in this video, I'm going to go with the more conservative stocks. I'm going to go with two quite conservative picks that I believe are going for an attractive price, and one pick that's a bit less conservative, but I still believe it's going for an attractive price and I like the company. Before we start, subscribe to the channel if you want to learn more about different stocks on the stock market, and flick this video a like if you're going to keep buying stocks even in a market crash when stocks are cheap. Now this stock is a great one for anyone who enjoys high dividends. And the good thing about dividends is that they keep getting paid even in a market crash if the company has quality with a strong balance sheet. And I believe AbbVie is. But first, let's get into what the company is about. AbbVie Inc. is a biopharmaceutical company that discovers, develops, manufactures, and sells a bunch of pharmaceutical products. Biopharmaceutical, that complex word, it just means a biology medical product. These products are used to cure certain health issues like autoimmune diseases, dermatology and oncology issues. But the three main reasons why I like this company is basically threefold. First, I like the price that it is going for. The price has been beaten down into something very attractive. It peaked at $123 at the start of this year, and ever since then it has kept going down. Now the second reason why I like this stock is because of the dividend that they pay, $3.84, and because the price is so cheap, it means a dividend yield of 4.16%. And the third reason why I like this company is because it is a dividend aristocrat. A dividend aristocrat is a company that has increased their dividend payout for 25 consecutive years or more. And AbbVie Inc. is a dividend aristocrat since it got spun off from Abbott Laboratories, which has been around since 1888. AbbVie Inc. since incorporated has increased their dividends year in and year out. But the stock does come with risks, and two of the biggest risks are: one, the fact that AbbVie relies so much on one of their products called Humira, and two, regulatory and political risks. The industry has long been criticized for its high prices, and Trump has been looking into this industry and got regulators to revise some certain rules. I like the stock. I'm personally happy with the risk-reward balance. I think this is a great stock to own in a market crash, and to own before a market crash to help crash-proof your portfolio. But let me know what you think of the stock in the comments. Also, don't forget that AbbVie Inc. is a dividend aristocrat, and these stocks have beaten the market since the idea was originated, and they have been less volatile. So you've got less risk, and you've got more potential for reward. CVS is a pharmacy healthcare company. They provide pharmacy care for the senior community, medical supplies, health information, and care management products. Now this is a stock that is very volatile. As you can see, over the past year it has been nothing but ups and downs. It recently got that hit from the market correction of about 6.5%. Now for me, the main reason why I like this stock is their price tag, essentially. At the time of making this video, they are selling for a price of $74, earning $2.94, PE ratio of 25, market cap of $75 billion, and they pay a solid dividend of 2.7%. Now, as I said, I like the price of the stock. It's going for a lot better price than most stocks on the stock market. So let's put it into an expected return formula to see what we get. And guys, a lot of you might not understand how this works, but still I think it is an important exercise to go through. It tells us around the return we can expect to get at a certain price with certain growth rates. I'll make it quick. So, the expected growth rate in free cash flow is 15%, current earnings is $2.94, and the price is $74. If we plug this into our wee formula, you can see that we can expect a return of around 9% with this stock, if growth in free cash flows can be achieved. Now, 9% might not seem like a whole lot, but it's definitely better than the market. It's a healthcare company, which does a lot better than most stocks in a recession because people still need their health taken care of, and it's selling for a nice price. So that's why I like the stock. But of course, do your own research on the stock and see what you come up with. If you don't like the company, tell me why in the comments. Now, I've done a whole review on the stock, so if you want, check it out. But let's do a quick synopsis of my overall thoughts on JD. So JD is a Chinese e-commerce company. They sell electronics, home appliance products, and general merchandise. Their business model is very similar to that of Amazon's core business. So they handle most of the transactions and logistics themselves. This way they can ensure customer satisfaction. And now, one of the main things that has helped with customer satisfaction is their same-day delivery scheme, which ensures quick delivery, and I'm sure Chinese customers love this. Now, the stock has been beaten down lately. If we take a look, the stock has essentially fell from grace. It's fallen over 50% since the start of the year, so it's half the price. Now, there are some key reasons why the stock has fell. One, Chinese stocks as a whole have done badly. I'm sure most of you guys will know this. They've been beaten up because of the US-China trade war, and this has obviously affected JD in a bad way. Two, JD CEO Richard Lui was arrested and then released on the accusations of rape. Now, we don't know how true these accusations are. I mean, he was released, but before you buy the stock, make sure you analyze the situation well, or you might want to wait until some further news comes out on the situation. So obviously this news has helped kill the stock even more. Now, this has left JD's price looking pretty attractive. They're currently selling for a price of $23.3. Obviously, they're still a growing company, so they are generating negative earnings, but have high expected growth. Their market cap is $33 billion. Okay, and with a lower price comes a higher expected return. Anyone who knows the formula will know that. So I'll take you through my expected return calculation. Now, for this calculation, we're going to go with what the management expect. And they expect a 3 to 5% margin on revenue in the future. They said this in their shareholder statements. So if we have a 3% margin, we get earnings of $1.26. Right, so this is the earnings model that I use. If they achieve these 3% margins and the expected growth rate, we can expect a return of just over 20%. Now, the key word is if. They have to achieve these margins that they expect, and they have to achieve the expected growth rate. Again, look at my other video on JD to learn a little bit more. Obviously, a 20% long-term return is great, but again, the risks with JD are definitely there. I mean, at the moment, they're not even earning positive profit. But the key with JD is it's a long-term play. It's definitely not a stock I would want to own for just a month. I mean, if we look at the current pattern, we can see that the stock is going downhill. So the next likely thing it's going to do in the short term is keep going down. If you don't have any patience, don't invest in the stock. If you don't understand the risks, don't invest in this stock. If you're going to comment below and say this stock did bad over the past month, don't invest in the stock. I like the stock for November because of its price, not because of its short-term expectations. And those are my 3 stocks for the month of November. If you guys have a favorite stock out there, let me know. I read every single comment. Now, as you guys know, with my stock picks, I like to learn from the best. I'm not just picking these stocks out willy-nilly, these are stocks that some of the best investors like as well. So my process is learning from some of the better investors, then seeing if I like the stock as well, and then putting it in this video. So with this video, I learned from the people from The Investors Podcast, great podcast about CVS Healthcare stock. I learned from the Dividend Sensei about AbbVie, and JD is a stock that I personally am interested in. So that is how I choose my stocks. I think it's the smartest way of picking stocks. First, screen your stocks through another investor that you like, and then do your own analysis of them, which I recommend for any investor. Everyone, thank you for watching. I'm so blessed to have every single one of you as a viewer. I know that if you're smart over the long term with your money, compound interest will do amazing things. When you combine the power of owning businesses and time, that's when you'll see your money grow. And guys, I'll catch you in the next video.